You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MAIDEL, one of the fastest, most efficient trading platforms in the world. MAIDEL is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about Spikes at myaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is Friday. It is noon Central. It is 1 p.m. Eastern. It is time for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the network upon which so many of you are binging these days, reminding you it's pretty much available on every platform under the sun. If you like what you hear, do keep rating and reviewing. We have been doing this for a while. This show's been running for, nigh on a decade, the network a lot longer than that. So we have quite the back catalog of reviews, but you could argue the new ones are even more important these days because so many new people are discovering the world of options and volatility, and they're turning to platforms like Apple Podcasts, Google, Spotify, whatever it might be, and looking for these subjects. So if you like what you hear, keep rating and reviewing. It really does help all the new people who are discovering these markets continue to discover the content. And of course, if you want to go above and beyond, join us live for this program, everything else we do throughout the week. Great pro Q&As. We got Mr. Scott Nations joining us again on Tuesday, coming up for our pro Q&A next week, talking about all things NASDAQ, VolQ, as well as his new book and everything else, answering all your questions about the world of volatility. If you want to participate in that, as well as options oddities later today and everything else we do throughout the week, theoptionsinsider.com/secret club is the place to go to learn more. And of course, however you listen live after the fact, keep hitting us up, those questions, those comments, those insights, those pearls of wisdom. We do love to hear from all of you folks out there. Let's see who we're hearing from on the old program today. First, let's go out to the Southern volatility mecca known as Austin, where we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Sebastian, welcome back to Volatility Views, sir.
You know what? I'm doing a lot better than VXX shorts. I will say that.
Look at you just diving right in here. We'll get to all that fun in a little bit. We are also joined today by a twofer squeezing in to the MAIDEL hot seat this week. One by a old school returning name as well as a newcomer. We have BENN, the managing partner, and Scott MAIDEL, the head of business development over there at QVR Advisors. Gentlemen, welcome to the Volatility Views program.
Thank you, sir. Good to be here.
Thank you, Mark and Mark.
Well, Scott, maybe we'll start with you. Longtime listener, Scott's name may be familiar. He's been on a bit. It's been a while since he's been on. He used to join us back in the day when FTSE Russell was a sponsor of the program. We would talk about RVX, and Scott was over there at FTSE Russell. He's been at a few places in between, and it's been a number of years since we've chatted with him. So maybe, Scott, we'll start with you. Give us a quick update. Where have you been since the last time you've chatted with us, and what are you doing over there these days at QVR Advisors?
Yeah, absolutely. So hello, everyone. My name is Scott MAIDEL. So currently head of business development for QVR Advisors. I handle prospecting, marketing, investor relations, content, and help keep things on track from those regards and so forth. Prior 20 years, as you mentioned, Mark, I spent in trading. FTSE Russell was a fun time. So primarily trading roles for Russell Investments in Seattle, Washington, and before that for First Quadrant in Pasadena, California. So familiar with most all things derivatives and volatility, but much love and respect for ops and compliance, as my first roles were trade compliance and cash desk operations at PIMCO long ago. So grew up in Southern California, basically surfing concrete, water, and snow. So back to California now in the Bay Area. A little colder here, but it's been fun at QVR so far.
The cold of California. I pity you so much, sir.
Yeah.
Wasn't it Mark Twain? The coldest winter you ever spent was summer in San Francisco. So yes, you do get a little chilly over there every now and then, at least on the ferry out to Alcatraz. And also joining us for the first time, we have Ben EIFERT. Ben, as we are wont to do with all of our first timers, why don't you give our audience a little bit of an overview of your background in the derivatives and indeed volatility marketplace, as well as what you do over there day to day at QVR Advisors?
Sure, absolutely. It's freezing over here in California. We go swimming every day after kids get out of school, like February, March, 72 degrees. It's really pretty rough. Sad violin play for me. But yeah, no, I've been around for a long time. I was an emerging markets macroeconomist back long ago, did a PhD at Berkeley, worked for the World Bank.
We won't hold that against you at all here on the show. Don't worry.
Absolutely. Got my start in proper finance, working on the Wells Fargo prop desk, which not that many people remember, but we were a force in markets, man. We were big. And that prop desk eventually spun out as a hedge fund that was called Overland Advisors. Initially, I built and grew and ran the quant team, started working on derivatives trading and portfolio management. Worked for a guy who then became my partner later. We left and started a firm or a fund called Mariner Coria on the Mariner Investment Group platform out in New York. Ran that for a while and then started QVR in 2017. So QVR has been going for about 5 years. We're out here in San Francisco. We do derivatives and volatility trading. A big part of the business is absolute return. So looking to be able to deliver returns in different market environments, not betting on things going up or things going down, understanding dislocations in volatility markets. And then we also run businesses more focused on custom solutions for big institutional asset owners, where we can use our expertise in derivatives markets to solve problems that folks have.
All right. Sounds like a fun panel. Let's get to it. It is time for the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we do just that. We break down the week that was and indeed still is. Vol trading and trending and unusual activity, all sorts of fun perspectives. And coming into the end of the week here, we were seeing a bit of a mixed session. It seems like most of the major indices have finally gotten their acts together now, and they're moving in one direction, if ever so slightly. NASDAQ, as it is wont to do, leading the charge, closing in on 1.5% to the upside right now, right around 1.4%. S&P playing the Goldilocks role, as it is wont to do, up a little over 0.5%. And Dow finally ticking into the green, up not even 0.1%. Of course, We're here to talk about vol. Let's run the vol table here. And coming into the start of the show, all this green to end the week means we're seeing mostly red on the vol screens. Spikes right now coming into the start of the show is right around 24.5. That puts it down almost 5 points from last week's show, about 4 3/4 points. VIX cash outdoing that a little bit to the dark side. As we kicked off the show, it was right around 24.25. That puts it down about 5 1/4 points. So outpacing spikes to the dark side by about 0.5 point. And then we have VVIX, of course, the vol of vol at about a 108. When we kicked off the festivities today, that's down over 15, nearly 16 points from this time last week. And not to be outdone, the V-Spikes, a.k.a. the Viking, a.k.a. the vol of spikes at about a 141. That puts it down about 9 points from this time last week. All right, the table is set. Let's go around the horn. Let's start in the land of the Southern Volatility Mecca. Mr. Meatball, obviously a lot has been lighting up the vol tape yet again this week. What has been catching your eye out there, sir?
Well, like as I stated at the top of the show, I think that, this being a vol show, we got to talk VXX and the craziness there. Barclays announced they're not going to issue shares, and the stock went through the ETN went through the mother of all short squeezes, blew higher, gave it away, gave it all back. Kind of a repeat of what we saw with TVIX a couple of years ago. The stock is still trading at a huge premium to fair value. I have it priced, I have it should be priced below $23 right now. So trading at north of a 3-point premium to where its fair value is. So until this kind of pressure comes off, VXX is going to be an interesting trade to watch for the next few weeks. And then the other piece is just the vol crush. One of the things we've been talking about is the weakness that we've seen during expiration week. So you go back prior to this expiration, 10 of the previous 12 expirations had been just the ugliest week of the entire month. And quadruple witching ones, the December one was bad, the September one was awful. And so there was a lot of expectations that we could see vol pop a little bit more this week with FOMC, the weird Tuesday VIX expiration. And instead we got the opposite. It has me wondering whether, we're kind of in a bear market. We're in a bear market, and whether this has been kind of turned on its head. This is actually a good thing for maybe Ben to address, because he's going to have a pretty good understanding of dealer positioning. I'm wondering whether now that we're kind of in a bear market, if dealer positioning is as such that now we're going to start to see maybe expiration week be strong during this kind of bear market, and then we start resuming selling after expiration is over, or whether he thinks this is just a straight change in trend.
Well, we'll get to all that. We'll get to all the fun with VXX in a second as well. We have a lot of questions about that, so we'll get to that a little bit later in the show. But I'm curious, Mr. Meatball, you've been talking about this week with trepidation for quite some time. Of course, as you mentioned, FOMC, quad witching, a bunch of other things popping off this week. Did it live up to your expectations, sir?
Well, we definitely got volatility, just not in the direction that I thought we might get. Instead, we got a pretty strong rally early through FOMC. And continuing yesterday, and now we're starting to get a little bit of a lift today. I'm, again, wondering whether things have gotten turned around and whether we're going to see volatility, come off during expiration weeks and then pick back up once everyone's book is kind of settled up. So just a really interesting week of trading. Lots of opportunity, but you had to be nimble and play the rally as opposed to play and the absolute tanking of vol, rather than trying to force the market to and implied volatility to move higher.
And let's go around the horn now. Let's go out to Ben. Ben, as we mentioned, kind of an interesting topsy-turvy week. A lot of big events heading into this week. I didn't even mention the early VIX expiration, so that threw everyone into a tizzy as well. Of course, there's the omnipresent volatility from Ukraine. We had the Fed this week. There's, of course, the other omnipresent lurking bit of vol, which is the pandemic. Is it receding? Is it advancing? A lot to unpack in this crazy week. What was catching your eye and lighting up your tape this week, Ben, from a volatility perspective?
Sure. Yeah. I mean, for us, certainly what you've had through a lot of the last month has been stress in the markets driven by the conflict in Ukraine, which is really tragic. The U.S. market did sell off some. We never really got that much realized volatility out of the U.S., right? It was more of a European issue. You remember seeing the Euro stocks, having huge swings. The S&P really staying, much better behaved. But you did catch a pretty good vol bid, right? VIX hitting mid-30s. Vol was expensive. People were afraid. Tails were getting a bit bid, right? But we never really realized much. It was tough to stay supported, right? And now we're kind of rallying and vol is coming out. It's tough to know, what the next week or two holds. But it generally speaking, tough to stay in the 30s with vol in the S&P with, realized in the more like 20, right? Without some real big catalyst in the near term to see that. Certainly things that we pay a lot. We're relative value, absolute return shop. We spend a lot of time thinking about, how the VIX complex is moving relative to the S&P complex. How different, how skew is moving. One thing I think that we've certainly been watching is, this has been really, again, a pretty low vol, choppy grind lower, and now a little bounce here, right? Hasn't been big crashes in the S&P. You've really seen skew come off quite a bit, be much softer than it has been in, over most of the last year. And, that just reflects relative lack of positioning by fast money investors, relative lack of demand for downside protection. People monetized a lot of the protection they had coming into the year in the sell-off and haven't really put it back on. And so, you haven't really seen that, that real bid for the downside tail here. And, you haven't realized the risk. So, we'll see how that shakes out going forward.
And Scott, same question for you. Obviously, we've covered a lot of ground already, but what's been catching your eye out there in the vol regime and in the vol landscape this week, sir?
Yeah, so I'll take a different complementary perspective to that. From a business perspective, typically, when we see events like this going on in the market, and of course, the volatility is part of the biggest part of the conversation. But if you want to drill down, you can talk about the war, you can talk about short-term rates, you can talk about inflation, the price of energy, whatever topic it is. All that feeds into conversations with clients talking about their portfolio volatility. And what's interesting for us, and this is right in our wheelhouse and sort of complementary to what Ben said, was it prompts conversations amongst prospects and clients to talk about tail risk hedging, talk about portfolio diversification, talk about, some of the things that we offer at QVR, potentially complementary to, sort of a fixed income substitute or, for their portfolio or whatever it is. So, it's interesting that, a lot of times these conversations perk up, exactly during the volatility, but, we like it when people actually get ahead of the volatility. So, we love talking about stuff like that. And, it's interesting because, I think investors are much more aware of, tools that they have for their portfolio. And I think, the usage and adoption of, instruments as well as, different sorts of strategies are just more prevalent amongst investors' portfolios today. And that's just a trend that we've been seeing for a long time.
Well, you mentioned at the top of the show, you guys over there at QVR, you also do some bespoke work with different clients, helping them handle their risk exposure through derivatives. I'm always curious talking to folks like you who are engaging with that side of the community, because obviously these are interesting times. What's the old Chinese blessing/curse? May you live in interesting times. We are all living through those together right now. Obviously, coming into the beginning of the year, people were hoping for a little bit of cessation of vol, cessation of the pandemic. We got instead a war in Ukraine. So it has been very interesting from a vol perspective, particularly over the last few months. What are you guys hearing over there on the desk and coming in from clients as they're contacting you? You mentioned what's going on with the skew. Are they looking to position more from a tail risk/hedging perspective? What kind of inquiries are you getting from firms right now in the midst of all this volatility tumult?
Sure, I'll shoot first, and Scott can fill in gaps where I missed. I mean, I think the most important thing I think we work on with clients in that that part of the business is really thinking about managing extreme tail risk, right? So managing extreme tail risk is not trying to tactically hedge a small pullback in the market or whatever, right? That's really hard. Nobody's all that good at market timing, in that sense. If you were, you don't need to worry about vol. You just, trade some futures or whatever, right? But what really can be additive to clients' portfolios, right, is that once every 3, 5, 10 year huge move down in equities where you get, the credit crisis, equities down 40%, you get March 2020, equities down 35%, to have a source of convexity in an asset owner's portfolio that's a huge source of strength and makes a ton of money that they can, liquidate and take that cash and put it into really distressed assets at a really great time, right? And that can lead to really good long-term outcomes for an overall asset allocation. So that's really what I think where people focus. They're usually less. Of course, they're kind of in the weeds of what's going on right now and what markets are stronger and what markets are weaker. But usually we discourage the conversations from being about, okay, is it time to really bet that markets are going down, right now another 5%, because it's just real tough to make those calls.
Yeah, and I would just add, so Ben kind of talked through a couple points. We recently put out a nice paper called Common Hedging Discussions Part 2. If anybody wants to see that, they can check out our website, qvradvisors.com, and just click through the disclaimer. Additive to that, though, what I would say is, a lot of people love to talk about tail hedging. And a lot of, oftentimes most of those conversations don't go anywhere because a lot of times, they can't, the prospect can't champion it through their internal process for a variety of reasons, or they just look at it, prohibitively expensive. Somebody needs to own that line item, but when you actually drill down and look at the data, you can see that over time, if you do have a reasonable tail hedging program, that can be additive to long-term portfolio returns. So we kind of get into that in that paper. But secondly, I would just say, what's really interesting to me is just where we are. When you think about where we are with equities, just shy off of all-time highs with, where fixed income markets is as a starting point. You have people evaluating commodities finally again as an, added diversifier. A lot of those conversations also, if it's not about, specifically about tail hedging, it's specifically about, just diversifying strategies, for the portfolio, whether they be like CTAs or just like an absolute return, relative value derivative strategy like we offer at QVR. I think those sorts of conversations are going to continue and heat up, as we move along through the cycle. And, it'll just be really interesting to see how people adjust and reshape their overall portfolio, just given where we are in the market cycle.
You mentioned tail risk hedging. I was joking with a guest, well, maybe half joking with a guest not too long ago on the show that we had a, shall we say, aggressive Eastern European dictator out there actively shelling a nuclear reactor at one point recently. That's kind of the definition of a tail risk event, or one in the process of unfolding. I have to imagine maybe during that period, your phone was perhaps ringing off the hook a bit over there at QVR, Scott?
It's been pretty busy. There's no doubt about that. It is interesting that the markets here are, I guess, back at, pre-invasion levels, and the VIX is, mid-20s here. So the markets have done a very impressive job of digesting the risk on all fronts, not just with the war, but on all fronts of everything that's been thrown at it.
All right, let's break down some digesting as we keep on rolling out askew into the vol surface out here coming into the start of the show. Obviously, we had the March future rolling off the board since our last show, getting back to that early VIX expiration cycle. So the April future is now our front month out there. And coming into the start of the show, we've been talking for a while. Man, we've been so backward. How long is that going to last? Well, it is finally coming off quite a bit. We've got the April future coming into the start of the show was off nearly 5 handles, about 4 3/4 points. I'm sure if we re-rack those now, it would be down even lower. And the May future was down about exactly 3 points. Mr. Sebastian, we've been watching this front portion of the vol surface for some time, waiting for the moment when that backwardation would come to an end. What was catching your eye this week as, shall we say, the vol surface eased, sir?
Yeah, no, just like that. We were in backwardation for a month straight, and just like that, we are out of it. I think the impressive thing is how the spread between the cash and the futures is now about $2. And you don't typically see it wide like that with the VIX still in the 20s, but I think that shows you where at least currently the market sees a normal VIX in the 20s as kind of where it kind of fair value or, fair value for risk. So we're not seeing a 2-point spread when it's 17. We're seeing it up here. So there's room for VIX to rally now and vol futures not to go up, and to see some ugliness in UVXY. We could see UVXY hit a new all-time low, and I know we'll get there. UVXY hit a new all-time low, and the VIX still be in the 20s, which would be really impressive and show you just kind of how crazy that ETF is. VIX as a whole, the curve is super flat, but it is technically in a contango. So, it's, if you're bullish, this is right at the spot where the S&P is sitting at the 50-day moving average. We're right there. We're still technically in a death cross, but you look at the VIX coming out of backwardation, you ask yourself, hey, maybe we've churned for long enough and we're ready to make a leg higher.
Yeah, it's a good point about UVXY. I was thinking the same thing myself earlier this week, looking at these levels. Wow, I can't remember the last time those two were so disassociated, but we'll get to that, like you said, in a little bit. Ben, same question for you. I'm curious. It seems like a lot of our guests on this show fall into two camps. They're either very deep in the skew camp, and that is their primary indicator, their primary way of gauging vol and sentiment, or they're all in on the vol surface and the VIX futures, and they hang their hats out there. I'm curious which camp you fall into, Ben. It sounds like you're a bit of a skew guy, but maybe you could be either or. And what role does the vol surface and the VIX futures, does that play in your overall analysis?
Sure. Yeah. I mean, I don't think we would be in either of those camps. I mean, we run a business where we look across, the whole derivatives landscape for where there are dislocations in the market that, come from end users of derivatives, just people doing stuff without necessarily, thinking about whether the price is right. Derivatives markets aren't dominated by guys like us, right? They're dominated by big pension funds just doing some hedging trades, or by, big retail funds like doing, the hedged equity funds of the world going out and rolling the put spreads that they have to roll based on their rules and stuff, right? Like we're the little guys. And so, we trade skew, we trade term structure, we trade, dispersion, we trade, cross asset relationships, we trade everything. So the key question for us is, what's interesting? Why is it interesting? Who are we on the other side of a trade from? And, does that make sense? What's the economics of the trade?
Glad to hear it. I like people who use all the tools out there in the toolbox. Speaking of said tools and said toolbox, let's get out to the VIX options. Let's get out to the options landscape in general out here. Not a lot of new positioning in spikes options since our last show. I mentioned last show that the big upside four-way trader, he took it off pretty much during our show a couple of weeks ago. He has not yet come back into reposition, so read into that what you will. Heading on out to VIX options, it does seem like they kicked it into high gear just since we started the show. They weren't doing a heck of a lot not that long, about an hour or so ago, and now all of a sudden just catapulted themselves over 600,000 contracts, about 611 as of right now. We'll get into all that fun in a little bit. The ADV has continued to tick down out there. It's down to about 579,000, down about 27,000 contracts from this time last week. Let's do a quick rundown of the top positions out there in VIX options right now. That's also moved down as well. It was 70-30 last week, puts over calls. This week down to 60-40. So a few more calls ticking in there, which is kind of interesting. Cost you only 119,000 contracts to break into the top 10 in VIX land right now, which is not a lot if you've been listening to this show for a while. That gets you to the April 24 puts. Number 9, we have our first of 4 calls here, the April 35s, 121,000, followed by 121,000 as well for number 8 of the May 35s. I see some related paper afoot out here. Number 7, 133,000 of the April 23 puts. Number 6, $1.36 of the June 16 puts. Number 5, 155,000 of the June 18 puts. Number 4, $1.57 of the April 20 puts. Number 3, 175,000 of the June 19 puts. And then ruling the roost out there yet again in VIX options this week, we've got some serious upside. We've got 224,000 for number 2 of the June 70s. And not to be outdone, number 1 out there with a little over 250,000 contracts, the OX 75s, still open for size. One of our ongoing discussions on the show has been, when are they going to take these things off? And the answer so far has been not today. And instead, they continue to add on more to this position. which is fascinating. Speaking of fascinating upside, today's paper, I did have a chance to dig in to see what has been driving this flurry of paper out there. It looks like someone's deciding to take those June 70s they had on and just roll them out to November. Why the heck not? Why not do it now? They did it 52,500 times this morning, dumping out the June 70s for 85 cents, picking up the Noves for $1. So doing that a roll for 15 cents. So not a lot of juice between Nove and June. Maybe that's why they decided to pull that trigger now. Either way, that is dominating the tape right now. A total of about 80,000 of the June 70s have gone up today and 75,000 of the Nove 70s. That's number one. Number two, number three, 50,000 of the April 23 puts. Number four, about 41,000 of the April 21 puts. And rounding out the top five most actives today, we've got 28,000 of the April 35s. We'll go through these kind of quickly because I know a lot of you guys have questions about all the VXX madness too. I want to get into that a little bit as well. But quick rundown here of all things VIX options. Yesterday, a decent day, not exactly lighting the doors off, a little bit shy of 600,000 contracts going up yesterday. The most active contract yesterday, the June 23 puts, easy for me to say, 51,000 times, followed by 32,000 of the May 35s. Back to that 35s track. Number three, 28,000 of the June 29s. Number four, 27,000 of the June 27 puts. And rounding out the top five this week, or I should say on Thursday, the June 19 puts, 26,000. Wednesday, even less paper, the big dog on Wednesday, the April 24 puts for 51,000 contracts. Same deal on Tuesday, only 534,000 contracts on the tape. The big dog on Tuesday, actually, 31,000 of the April 40. So getting back to the upside, followed by 26,000 of the June 29s. And then back to the 70s. The April 70s, not even going out to June or November this time, with 25,000 of those for number three. Monday so far is the reigning king of the volume this week, but if today continues apace, that may change. Monday, 920,000, so threatening that 1M handle yet again. The big dog on the big day of the week, Monday, 87, almost 88,000 of the June 21 puts, followed by 87,000 as well of the June 70s, the aforementioned June 70s, which apparently they are already rolling. That is interesting. Number three, about 48,000 of the March 32 halves. Number four, 42,000 of the July 60s. And rounding out the top five on Monday, a very active day, 42,000 of the June double calls, a.k.a. the 55s. Mr. Meatball, a lot to unpack this week. First off, did you see this? Looks like a 70 call roll. What are your thoughts on that? And then B, anything else lighting up your tape and catching your eye in the land of VIX options this week, sir?
The biggest trade for the week that we saw was a June risk reversal. It was customer buying June puts, selling the June 70 calls. I believe they bought the June 20 puts, doing it for, I forget the exact price, but then they did it delta neutral, tried it up to futures. Did that sucker about 80,000 times. It was a huge, huge trade, biggest trade of the week. And then, no, I have not seen the trade that you just spoke about in VIX, but I am looking at it right now. VIX we're getting some activity today here. Yeah, you got a June Nove roll, paid 15 cents, 52,000 of those. Pretty decent sized put trading in VIX today. We have a April 23 45 risk reversal that went up for size, along with it was an April 23 put. They paid 115, and then they bought the 35-45 call spread for about 72 cents. So interesting trade there. I don't know which side. I'm guessing they sold the 23 put. I don't know. So a little bit of a credit there to be long above 23. We continue to see this is an interesting one. The 23-21 put 1x2 went up 16,551 times versus 33,000. Pretty decent sized trade there. So we're getting some activity here today, Mark, kind of across the board. And yeah, the June no 70 roll is interesting, and my guess is that it's just a book hedge against what's going on. It looks like a total of 60,000 of those went up at least. So 70,000, yeah, decent sized trade. Wow, that's a big one. But we're seeing some huge block trades across the board today for a day when the VIX is down. Lots and lots of repositioning here.
Yeah, you're right. That's strange. Usually on days like this, we see VIX doing a whole heck of a lot of nothing. And it was doing a whole heck of a lot of nothing until pretty much we started the show, and then everything just kicked into high gear. I'm curious, Scott and Ben, for you two, you mentioned you use a lot of different inputs in your models and your analysis and with talking with clients. How much of an input are the VIX options, what you guys do over there at QVR? And do you pay attention to some of these interesting and outsized prints that are going up out there? Maybe Ben, we'll start with you.
Sure. Yeah. I mean, we certainly watch the VIX options. They're involved in some of our strategies. The type of, usually when you think about these kind of prints, so we're not flow guys, but like, the kinds of accounts out there trading big size and VIX options, usually the big long dated calls going up is going to be a book hedge, a tail fund, something like that. Or it's going to be a relative value fund effectively kind of taking down that size and doing something else against it, buying deep out of the money S&P puts or, some type of variance swap or something like that because they see that basis as having gotten dislocated, and then you'll get the big guys coming in to do risk reversals, either to your point, selling that put to buy the upside call spread or call as a hedge or doing the opposite to just have a slightly different profile of getting a short vol bet on, right? And then you'll have the folks coming in to do the 1x2 to try to get a low premium bet that vol goes down some. And generally they're directional trades, right? And then the role of people like us is, to look at some of the more nuanced pricing relationships under the hood. If people are doing a whole bunch of big risk reversals in the VIX options, what's that doing to the skew of VIX options, and what is that? Is that interesting to us or not?
Ben, you're bursting my bubble here. You tell me that wasn't someone just coming up outright and just loading up on all the 70s just for fun? You're killing me. You're killing my perceptions of vol. You're taking all the fun out of the show this week. Scott, anything to add there? How much you guys utilize or watch VIX options, sir?
Yeah, I would just say, kind of complementary is just, we fundamentally believe, crazy things can, happen in the market. And we've seen crazy things happen over the past 2 years. So be careful, do your stress test, do your, risk analysis, know what you own. And, we are believers in not allowing unbounded negative convexity risk exposure in our portfolios, just because we don't believe that something's going to happen. I'll just leave it at that. VIX
so like fun, you wouldn't typically these days see somebody going out and selling that 70 call for fun in big size, right? Because all people who likes doing things like that, they didn't make it through 2020.
Yes.
No, they did not. Those people get their comeuppance about once every 10 years. That's
right.
They print money and then one day, boom. And then shocker, a year and a half later, someone's giving them money and they're doing the same thing again.
Exactly. It wasn't their fault.
It wasn't their fault. It was bad timing. Unbelievable the way these guys.
Market manipulation for sure.
Oh yeah, no, they got screwed.
It was the same thing with all those guys in the back of the SPX pit. They changed jackets every 3 months because they always blew out, but they always found another backer to keep backing them, selling their crappy teeny puts in the S. So there's always someone out there who is new and fresh to this and thinks that's a great idea. And it works till it doesn't. Right. It's just what you do in the period when it doesn't, where it all the rubber meets the road. Speaking of things not working, we kind of got to get to this now. You started the show with it, Mark. We have a lot of questions about this. This is clearly on a lot of people's minds right now. We're going to skip the listener questions today. I was going to move them into the show proper. Let's get this one here from Tony P first, one of our fun pro members. He says, what is your recommendation for trading VXX now that Barclays is no longer supporting the product? Which product should we use to replace it to fade volatility? Maybe we'll get into that. We have another related question here from MJT. He wants to know what the heck is happening with VXX right now. Is it broken? So, Mr. Meatball, you started the show with this. Let's dive into it now. For people out there who are living under a rock, they don't know what's going on. Give us a quick synopsis. What the hell is happening to VXX right now? Yeah,
well, Barclays, they're not supporting the product. They're still doing the roles that need to be done within the product. But I believe they hit some position futures limits within the VXX fund itself on how much it can hold. And so they have stopped issuing new ETNs on VXX. And I think it got some people flat-footed. You saw vol absolutely explode when kind of that news came out. It's since started to come off. It's still trading at a huge premium to its fair value. This is very similar to what happened to TVIX. The interesting thing is whether Barclays is going to to make this as a move to completely stop supporting it down the line, or whether as interest in this vol comes off and some of the futures pressures comes off, they decide to stay in it. One of the things that is interesting with this product is, it's $37 billion and under management, and Barclays doesn't make a lot of money with this thing. It is not a huge profit center for them. So, I wouldn't put it past them to, let the dust settle here a little bit, then say bet, and, say, for all intents and purposes, say we're done with this thing. If that's the case, then VXX does have a clone, VIXY, VIXY. And if you want to know the difference between how much VXX is outperformed, and you don't have a trusty sheet that will tell you exactly what its fair value is, you can just look at VIXY and see how much that thing is down since March 8th, which was the peak, versus how much VXX is down. And right there, you get your answer on that move. So to that extent, on March 8th, VXX hit its kind of trading peak, not including what happened on the 15th, at about 29.36. Its recent peak closed 28.15. It is now down to 25.93. So it's off, call it $2.20. VIXY, so less than 10%. VIXY hit a peak of, call it, VIXY's peak was 23.97, closing 23.01. It's now 18.50. So call that, what is that? Almost $6, down $5.50. So VIXY's down 20%. VXX is down less than 10. And that is because of the pressure created by Barclays not issuing shares.
And I know you've in the past been pretty staunch advocates of VXX. You guys traded a lot over there in your option pit for your clients. What have you guys been up to this week? Have you been mostly hands off as all this madness has unfolded, or have you still been trading it?
Oh man, I just bought calls with both hands in. Totally long. No, I'm kidding. When this initially happened, the vol of the options shot to about 160, 170%, and from already high at about 120. So the funny thing is, you bought puts thinking that the stock that VXX was going to drop. You really didn't make a lot of money because the Vega component of the options absolutely crushed you. So we've been looking at bear butterflies, bear 1x2s as ways of playing VXX eventually normalizing and coming back down to earth.
Scott and Ben, I'm curious for you two. Do you guys pay attention to these vol and value destroying products like VXX and UVXY? And have you been aware of what's been going on in this, shall we say, fun product over the past couple of weeks?
Yep. So certainly those ETNs are one of the big end user bases, that bring people into volatility markets and create dislocations, because I think most of the users of VXX don't necessarily fully understand the VIX futures term structure and how to think about the economics of these positions, right? The dislocations caused by this exact kind of thing, suspension of issuance, go way back in this market. I mean, way back to TVIX the first time back in 2012, right, when Credit Suisse had to halt issuance, and TVIX went absolutely crazy, went to, I don't even remember, I think 120% premium to NAV for a while. The thing you have to keep in mind is, I think, the behavior of an ETN that's not pegged effectively to any fundamentals is very unpredictable and wild, and just staying uninvolved is a perfectly okay thing to do as well. There's obviously a lot of risk there. I think, generally speaking, not to comment too much on Barclays' decision, but I think, Meatball's point was exactly right. So that the capital charges that it takes to run these things are extremely punitive, and I think you want to think about firms like Barclays probably being less and less interested in being involved in these kind of products at all going forward. I think that's going to be a trend across ETNs, not just VXX.
Let's see who is involved in this product right now. Coming into the start of the show, VXX, as you mentioned, kind of disassociating, was actually up a little over a point, about 1.3 points from this time last week. Looks like it has given back some of that now. It's down about half a point from where it started the show. So still up about 0.75 of a point from this time last week and still managing to do some paper out there. 236,000 contracts on the tape. The ADV, in spite of all this tumult, has actually increased over the past week. It's up to about 385,000 contracts, up about 14,000 from this time last week. So some folks are still piling into this one with gusto. We're kind of coming up against those. Let's do a quick top 5 out here. Number 5 out here, by the way, we're at, looks like still 9-1 puts over calls out here in terms of VXX. Number 5, 37,000 of the April 18 puts. Number 4, 38,000 of the March 18 puts. Number 3, our first and only call in the top 10 this week. 39, almost 40,000 of the April 30s. We got number 2, we have the weeklies expiring on the 1st, April 1st, 16 half puts, 40,000 of those. And then we got, looks like number 2, we've got 41,000 of the March 19 half puts going out next week, and the weeklies. And then number 1 out there, 53,000 of the regular monthly March 17 puts. And those seem like they're perhaps a bit of a bridge too far there as well. In terms of what's going up out there today, a lot of April 20 half puts going up 27,000 times today, and then out to May 20 puts. So that's surprising. I thought we'd see a lot more in the March expiration cycle, but they're way down the bottom of the list out there today. It's all April and May, and mostly 20, 21 half, and 22 puts going up out there today, which is kind of interesting. Speaking of interesting, let's see what's going on out there in the land of UVXY, another product you folks love to watch go to zero. Not exactly doing a lot of that over the past couple of weeks until really the last few sessions. As we mentioned, once that backwardation tends to ease, that's when you start to see that UVXY start to kick it into high gear to the downside, as if it's making up for lost time. And that's exactly what it was doing over the course of the past few sessions. Coming into the start of today's show, it was at about exactly 16. It's still kind of hanging out at about 16 right now. Actually, it's down almost 3 points, about 2.75 points from this time last week. So again, all that erosion kind of catching up just in the last few sessions. In terms of numbers, it's putting up a little bit less this week, only 245,000 for the ADV. That's down about 14,000. And today, looks like it may surpass that. We'll see. It was about 192,000 contracts a few minutes ago. Mr. Meatball, I think catching your eye out there in the land of UVXY, which we were talking about at the start of the show, is as disassociated from VIX as it has been in some time, sir.
Yeah, UVXY is definitely fallen by the wayside. We've had a massive shift in the VIX future this week. April got absolutely smoked post-expiration. So that's why you've seen, with the VIX coming off and volatility coming off, UVXY just absolutely take it in the chin, as it does when this type of stuff happens, because it's a levered ETF. If you're going to play it, it's a day trade, or you can maybe play it long-term short vol, but it is not a long vol play for more than a few hours.
Yes, if you've learned nothing from listening to this show for nigh on a decade, if you take nothing else away from it, do not buy and hold these products, VXX and UVXY. Do not make these your long-term vol exposure in your portfolio, because you will live and your portfolio will live to regret it. Let's do a quick top 5 out here, because, again, we're kind of coming up against it. Number 5 out there, about 9,000 of the Jan 2024 1 puts. I just love some of the strikes out here in UVXY. Number 4, 10,000 of the March 60s. So getting back to some of that, shall we say, interesting upside we see going up out there in UVXY every now and then. Number 3, about 13,000 of the March 18 puts. Number 2, we've got June 20 puts, 13,000 of those. Number 1 out there, we got expiring today, the March 70s, 23,000 of those bad boys. In terms of what's lighting it up out there today, looks like 22,000 of the March 17 calls, followed by about 14,000 of the March 16 calls, and then about 10,000 of the March expiring next week 16 puts, followed by the expiring this week, the regular monthly 16 puts, also going up about 10,000 times. And rounding out the top 5 today, we got the March 17 calls expiring next week, about 7,000 of those. But we are coming up against it, listeners. Not a lot of earnings ball to report right now. We're waiting for the new cycle, the new season to kick off. You guys, of course, can keep an eye on all the latest earnings move results, earnings season, and earnings trades reports completely for free. You know where to go, theoptionsinsider.com. Meanwhile, it's time for us to go into the most difficult, the most dangerous portion of the show. I know Scott and Ben have been preparing for it all show. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball, the portion of the show where we attempt to wrestle with the slippery volatility gods and see what they have in store for us over the course of the coming week. I'm actually going to be nice. I'm going to buy you guys a few more minutes as I pay off a couple of quick listener polls that we did here on the show. Last week, we asked you guys, what are you guys feeling for this vol premium we're seeing from the Fed in Ukraine? Will it last, or is it just a bit of a momentary blip in the market? Quite simply, we asked you, where do you think VIX is going to close at the end of March? Gave you four choices, very wide, very broad choices. North of 35, between 29 and about 35, between 23 and about 29, or below 23. And when this poll went out, 37% of you said north of 35. So you were feeling that this tumult, this lift, this juice in vol was going to continue through the end of the month. So far, it's not the case. But again, we've seen the vol market is still young. Anything can happen over the course of the weekend and any given day out there these days. Followed by about 29% saying 29 to 35, 23% saying 23 to 29, and only about 11% saying below 23. So not a lot of you were playing the vol fade. Very interestingly, not really a vol question, but when we were talking about yesterday on our TWIFO, This Week in Futures Options show, it has carried over to today. If you haven't voted yet, get out there at options and vote right now. Very interesting, contentious issue. We asked you guys if you could buy one option on WTI crude oil by the end of the year. I should say that expires by the end of the year. Which one would you buy? I gave you two very simple choices. When we posted this, WTI was right around the par strike. We said the D's 115 call or the 85 put. All of you in the beginning were all piling into the 85 put. As this has progressed and we're heading into the final minutes here, there's been a huge resurgence and upside. It is now exactly 50-50 between the 115 call and the 85 put. That is surprising. So you have a few hours left. Podcast listeners, you may have a chance. It may be up by then, but definitely the live folks. Get in there at options right now. Make your voice heard if you want to change that. All right. It is time to unleash the crystal ball for this week. Let's start out here as we round out the show here. Spikes hanging out at about a 24.60 right now. So not a lot of evolution between the start of the show and right now. And VIX still hanging out right around a 24.25. I'm looking at our prognostications for last week. We had the once and future and now present Dr. VIX. He was at a 26.5. So no joy for him. Mr. Rock Lobster was at a 25.42. He was looking good yesterday. I know he was trying to claim victory yesterday. It has since moved away from him on the Spikes front, but on the VIX front has moved away as well. And I was feeling a little bit more juice at 28.33. So looks like a lot of our listeners out here, to let our producers go through the list of listeners. If your prognostication was within our margin of victory, listeners, a tenth of a point, expect to hear from our producers with a fun, fabulous prize. But all this is a long way around to saying there are no winners from the hosts and guests this week. So that means it's a wide open field. So I will be charitable. I will allow you folks over there from QVR to set the tone, to set the lead. I will allow you to choose Scott or Ben, whoever wants to go first. What are you feeling for this time next week? The end of the show, not the end of the day, the end of the show, which makes it doubly hard. You can pick your poison, VIX or Spikes or whatever you want to prognosticate. Have at it.
I'm pretty boring. I'm going to say VIX 25. I think this is, this is not a teens VIX market. We're not, even if we keep rallying, there's too much going on in the world. People are too scared and too much tail risk of Putin doing something crazy to go, to get crushed from here. And, obviously we can have a spike. We can sell off again. But I think this is a mid-20s average VIX market, I think, is kind of where we're going to trend.
Tail risk from Putin. I'm not sure what you're talking about, Ben. How could there possibly be any unknown risks lurking out there right now? We have quite literal weekend risks these days, which is always fun for everyone. Scott, are you in that same camp? You going to diverge? What are you feeling for this time next week?
Yeah, I would definitely agree with Ben, although you just never know. You certainly could have a big binary event happen with Ukraine. But I think all else, putting that aside, I think the trend is, mid-20s VIX. You do have month-end, quarter-end rebalancing coming up also. So even if the markets continue to trend higher, as they have the last few days, you're probably still going to see, maybe VIX well bid, to sort of catch a floor.
So what was your number again? I'm sorry.
Yeah, mid-20s, in line with what Ben, mid-25.
I'll put you down for a 25 as well. We got a double action here from QVR. I can see why you guys work together. You're of the same ilk out there. All right, let's go on out here. Tell you what, Mr. Meatball, I will be charitable. I will allow you to go last if you want to scum me or not, as I will go next. I was feeling a little bit more vol this time. Last week, I was feeling a 28 and about a third. I'm still feeling a little bit more vol. I'm going to bring myself down from last week, though. I'm going to say about almost 3 points exactly north of where we are right now. I'm going to say 27-23 out there. So, Mr. Meatball, there you go. That's your market. 2.25 points wide. You want to come inside, or are you going to try to go outlandish, sir?
Yeah, well, you know the rules, right? I always bet against my book. So I'm going to go 33-33.
All right. Hey, given what these markets are like right now, we could be there snap of the fingers. By the time this show is done, the day is over. We could be there. Who knows out there? Looks like a lot of our listeners are all over the place, which I expect out there in the live chat. We got some teens predictions there, which is kind of interesting. Doesn't seem like any of us on the panel are feeling a teen, but maybe some of you are feeling a little bit of a road. Most of the rest of you seem like you're in the mid to high 20s range. But again, if you're listening after the fact, you want to participate as well, get your questions in. We like to have them in before the weekend. Some of you like to play next week. That's cheating. That's too easy. You're getting far fewer days to prognosticate there. But that's our vol market for this week, listeners. 25 on the downside, 27, 23 in the middle for me. And Mr. Meatball playing the upside Russell Rhodes game at 33-33. All right, listeners. That music means we've come to the end of our volatility journey for this week. We did a lot of living over the course of an hour, listeners. VIX, the futures, the skew, the VXX, all the mad issues with that UVXY, your prognostications, and a whole bunch more. I want to thank our guests, of course, Scott and Ben from QVR. You did an able job holding down the MAIAX hot seat. Before we go, gentlemen, if our audience is interested in checking out what you guys are working on over there at QVR, where should they go? What should they do?
Yeah, QVRadvisors.com, or you could reach out. You could reach out to us through the website. Our contact information is on there.
There you go, QVRadvisors.com. And Mr. Ben, a little birdie told me you like to do a little Twitter every now and then, sir.
Every now and again, you could look me up there. You're gonna find a whole lot more complaining about what my kids just destroyed at my house than you are about markets. But every once in a while, there might be something.
Yeah, and folks, he's a good follow because every now and again he does this, interview questions for differing levels within a vol firm, and they're always fun to watch him. If you want to know how a professional thinks, watch those questions and see how they get answered, and I think it'll open your eyes to what the playing field looks like if you're jumping into the vol space.
And our listeners want to know, Mr. Ben, where does the DJ D-Vol come from?
So if you guys know, the CEO of Goldman Sachs, his name is David Solomon, right? And he's like an EDM DJ on the side, which of course the board of Goldman Sachs does not really like. But his DJ name is DJ D-Sol for David Solomon, right? And then it turned out, when I was talking to a buddy a while ago, of course, therefore all the senior partners at Goldman have their secret DJ name, right? So DJ, which like you kind of got to, right? If your boss is DJ D-Sol, then you have to have your secret DJ name. So DJ D-Vol is my secret DJ name, but it's not so secret.
If you ever spend any time in the Goldman HQ there, the first thing that leaps to mind is not secret DJ names over there when you're eating in their fine dining room and everything else.
Which is why
yes,
it's so funny.
Yes, and everyone still has a suit and tie at their cubicle. Yes, good times.
Everybody else at Goldman is like, can you just not do that anymore? And he's like, no, this is my gig. Like to play golf. I like to spin.
There you go. Everyone has to have their side hustle over there. In his case, it's racking up all the DJ monies. Check him out over there on Twitter. Just search for DJ D-Vol. You'll find it. And Mr. Meatball, of course, if folks want to hit you up to talk about all this latest brouhaha with VXX or the big money flow or a whole lot more, where should they go? What should they do?
You know what? I did not know that about the Goldman guy. That's funny. Our future Secretary of the Treasury does Molly and is a DJ. That's really comforting.
It builds confidence. Yes.
Yeah. And go to optionpit.com. I'm writing commentary on VIX, volatility, macro every day. It's worth a read. Come and check it out. Optionpit.com.
And of course, you know where to go to learn more about all things spikes. MyAxOptions.com/spikes is the place to go. Of course, you get all the historical data. You get the releases for the latest updates. You get links to a cool show called Volatility Views. Now, of course, you get access to not just the MyAx shift search data, but also all the cool quick strike data. You guys love it on the futures options side where we talk about it over there with CME and TWIFO every Thursday. Now you can do the exact same thing. Look at the quick skew numbers for all your favorite equity options as well. MyAxOptions.com/spikes is the place to go. We have to get on out of here, but we'll be back again in a little bit less than an hour to detail the crazy week of unusual activity in options oddities. How did our trades do? Did we make or lose money? We'll break it all down in a little while over there for all you Secret Club fans. For everybody else on the on-demand side, this concludes our broadcast week. I want to thank you all for tuning in to everything we put out there throughout the week. Remember, there is some very literal weekend risk out there right now. So stay safe, stay frosty. We'll see you back here next week. Another episode of Volatility Views.
Volatility Views is brought to you by MyAx, one of the fastest, most efficient trading platforms in the world. MyAx is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, Spike, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about spikes at MyAxOptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.